Hi everyone, and welcome to today's webinar. I think I've just blown David's eardrums out because we've been playing with our audio, as always. Paranoid about it not working. So welcome to today, as I said, welcome to today's webinar. Great to have you join us for this session. But before we start, may I just draw your attention to the disclaimer that I know has come up on your screen. As you know, this can be a very risky business, so please don't even think of using money that you cannot afford to lose. So I will just take that down. And in fact, we're looking at the pound yen, or certainly I've been looking at the pound yen this morning. I think David's got the euro yen, and it's actually quite a nice introduction, the yen pairs, to give us a view of what the market is thinking this morning. In particular, I mean, yesterday, as you know, was a holiday in the States, so everything was, well, nothing was moving very much. But we ended last week, certainly we ended this particular session on the pound yen with volatility, and I did a quick catch up on what happened after we ended the webinar, which basically we had a lot of volatility come into the pound with the pound yen. It was after retail sales, and we talked about volatility, what we can do, what normally happens when the volatility candle is triggered. And what I said at the end was, look, if you were, what was going to happen next after price had retreated to within the spread of the candle, I said, well, if this is going to carry on further, it's got to go, it's got to break the high of the volatility candle and possibly offer a trade to the long side. And in fact, that's what happened. There was a very nice trade to the long side on the faster time frames with the Renko, and it duly played out. But that was after we stopped. But I did write about it in on my Forex trading page on Facebook, where all the levels were, I said, where it was heading, and it was great. It was lovely to see that play out. And really, it was, the pound yen was very characteristic of all the yen pairs last week, where essentially what we also said was the whole market now is waiting on what's happening with China and the US to set the market, the next phase for market mood. Friday saw a huge uplift in the indices on talk, rumor, comment that the US and China had reached some kind of agreement. We actually haven't had any official communique, but the market reacts to what it thinks is going on, and that's where you will see this. You will see this sentiment, which we talked about last week, reflected in the yen pairs. They can be more volatile than the other pairs, but when they move, oh boy, they really do move, and they move very, very strongly. So I'm just going to stop there. I'm going to pass back to David, and we will catch up with what we've been looking at on the charts.
Thanks, darling, and a very warm welcome to, I was just blown out. Sorry, am I too loud? Sorry. Very warm welcome to you wherever you are in the world. Good to have you along with us today, and nice to see so many of you today. And also a mixture of, I know we've got a lot of our customers in the room. Some of you are on the education program, I know, and also good to see some new people as well. So a very warm welcome wherever you are. If this is the first time you've joined us in one of these sessions, we run it as a two-hander. We tend to focus on, clearly it's Forex. Anna tends to focus on the MT5 platform on her side, but I've got the NinjaTrader screens running on my side as well. So we'll both be looking at opportunities and what's going on in the markets. If you have any questions, please just drop them in the chat box. We're happy to answer them in there for you. And if they're longer questions, we will endeavour to answer them on air. So happy to take any questions you may have. I'm going to pass back to Anna. As you can see, we've got there's quite a lot going on this morning, given there wasn't a great deal going on yesterday. So there are actually some decent moves, and have been for the last hour or so, particularly across the pound, euro, dollar, and also the yen. So there's a fair bit going on. I'm just going to pass back to Anna, and we will get going.
Thank you. And I see also we have someone, I think we kind of met each other when we did the presentation over in LA. I think that's Sonia from the other night, David. She's in the room as well. So you're very welcome, Sonia. It's lovely to have you join us. I don't know what time it is where you are in the world. I hope it's not too horrible a time, and you should be sleeping. Right, going back to the pound yen that we see here, for the British pound, very quickly, I'm just going to come up with, there we are, on Forex Factory. And in fact, we have yet more news at 9:30 for the British pound. I mean, obviously, there's a lot of political news for the UK. Some of you may have picked up that there's been a lot of what should I say? Well, it's controversy. There's been a breakup. There's been a breakaway group within the main opposition party here in the UK, in the Labour Party. Although I have to say, it didn't really have much of an effect on the pound. It's all to do with the Brexit muddle that's going on at the moment. From a personal point of view, we normally travel out to Italy in about sort of April, May time, and we take our two dogs with us, and it may, you know, in the greater scheme of things, it may not be terribly important, but we don't even know whether we can take them, because as part of this muddle that is going on, until the up to the 29th of March, the way things had been organised, if you took your pets abroad, we don't have rabies here in this country, and it was always very difficult to travel with animals backwards and forwards into Europe. But anyway, there's a new system came out. We basically have to have the pets vaccinated against rabies, and we could just hop onto the onto the Channel Eurotunnel, and we could drive to Italy and drive back. You know, the dogs would be checked. They'd have their pet passports, but with the 29th of March coming up, this is the level that, you know, things are really bad. We don't know whether we can actually use the existing arrangements, and it all comes down to whether the UK, what category the UK is going to be given by the EU. If we come into what's called an unlisted category, it means it's very, we have to start the whole process again. Lord knows when we can travel. We certainly can't take the risk of being out of the country before the 29th of March. And so, you know, this is only sort of one very small example of what still needs to be resolved before the 29th of March. But maybe the market is taking the view that because of, you know, things like the pet passport situation, we will get this sort of extension to try and sort things out, and maybe that the markets are taking that as a positive. So who knows? But trying to interpret you know, the vagaries of Brexit, and then trying to look at you know, possibly at a trading opportunity, I would say by all means have it at the back of your mind, but you really would be far better off looking at your indicators, if you have them, certainly on the currency strength indicator, and just trade what you see on the chart. It may be a reflection of what's going on, it may be a reaction to what is going on, but if you get an opportunity, as we've seen here, I've got I actually use, on the shorter term time frames, I use a Renko, which is a non-time based chart. I've got the 3-minute chart, and I've actually got the hour chart. Sometimes I have the hour or the 2 hour, because I need to have a benchmark. I need to have some levels to where I think this price is going. Now, what's interesting on the hourly chart is there has been volatility triggered on the hour. Now, what I said earlier, whenever we see volatility triggered on any time frame, and with quantum users will know, you get these two little purple dots come up on the candle. The first reaction, once that momentum starts to ebb away, is that you see exactly what you see here. The price will go back to within the spread of the candle. Now, we had volatility earlier. As I said, this was the nice move higher. We had a lot of congestion coming up to the European Open, we've got here with MT45. The timestamp you see here, you've got to take a couple of hours off. So it says 8:18, but that's actually 6:18. There was an opportunity already to the long side. We have the trend monitor turning blue, and we have a very gentle, we see here a very gentle rise. The volume it's very compressed here because London hadn't opened, and this is another thing about volume. And yes, you have to remember, you have to read it in context of the Forex session that you are in, And if you're looking back, you also have to make sure that you look at the time that that volume came into the market, because if it was at a time of lower liquidity, these volume bars are, as I said, certainly when London comes in, this is the in-rush of volume that we see here. So it has to be read in context, and it also has to be, it's also relative. Yesterday was a good example because we had a national holiday in the States, so the volume bars on the daily charts have to be seen in the context and relative to what happened yesterday. So we had this gentle, then we had the volatility here to the downside, and as I said, the price went back into the spread of the candle. But instead, on this occasion, instead of it breaking below the sort of low there and also that support level, in fact, price simply went into consolidation. You can see the volume on the down candles falling away. Then you had a little, it's like a little hammer candle. You had a pivot, volume coming in. Clearly, there was price support at this level for the pound yen. Now, where would you say, having seen that volatility candle, what would you do? We've seen price go back into the spread of the candle, but until price actually breaks either the high or the low, we don't have any clear direction. So any sort of potential re-entry point after volatility has to be once price has cleared either the high or the low of that candle. And in fact, it went along here. Then we had the London Open come up. What have we got here? 7:57, yeah, 10 o'clock, 8 o'clock, and we've been going up higher ever since. Now, what this also shows is the importance of multiple time frames, because you have to have a slower time frame to see whether what you're looking at on the time frame that I've been looking at, the 3-minute chart, is actually going to continue. And when you see volatility on a slower time frame, that is also going to put a brake, if you like, on the move that you see. Now, if it's a very slow time frame, you could almost say, well, is that an opportunity? This retrace into the spread of this candle on the slower time frame, is that an opportunity to the downside? Well, it all depends, and really, this is where you have to use something like a Renko on Ninja. We've got the tick chart. This is the move higher. And what Renko does, it smooths out all those little pullbacks and noise, if you like, that that candles do give you with the wicks. Wicks are hugely important, but they also reflect indecision. They can reflect a bit of buying coming in, a bit of weakness coming in. The Renko actually helps to smooth it out. And what it's also reflecting is this pause now as a result of the volatility candle. And I haven't, let's have a look, where's my CSI? Let's have a look, where's it gone here? Lost it for a minute. That's my yen index. Let's have a look. There we are, where's my yen index? We also have a yen index for on the quantum tools, which is playing up at the moment. Let's have a look. It's on the 15-minute chart. Yes, this is the sharp move lower when the this is obviously inverse. This will tell you what the yen is doing across the pairs, but it's essential that you have access either to a yen index, either from Quantum. I think there's also a yen index at investing.com, and that will also help to determine whether the move in the yen is actually coming to an end or not. We also have a dollar index on the quantum tools, and we're a euro index, and we're also looking to develop a pound index for MT45 and Ninja. There is a pound index for the Trading View set of tools, but we haven't ported it over to the to MT45. So we're at a pause point. We know why there is a pause point. Do we think that there is an opportunity to the downside for this? Well, only time will tell. Let's have a look at the CSI over here. Where are we? Well, the CSI actually also paints the exact same picture, the graphical representation of what we see on our charts, where we see this is the very strong move higher that we've seen in the British pound, and we've been capturing it against the yen. The yen has actually turned up. The pound is just about to turn over. So yes, is there a potential for a reversal? Well, it all depends how long you think you want to stay in a trade, and whether you're looking to take a very small number of points on a regular basis, or you're looking to trade this for a medium or longer term. So this is what the CSI is telling us. you would normally, if you have the CSI, you would certainly be looking at the CSI in multiple time frames. To start, this is what we did in the last webinar, which gives us an overview of what the market is, what the currencies are doing, the individual currencies are doing. Perhaps you have, you specialize in one or two pairs, 2 or 3 pairs. So you really want to know what are the currencies that you are interested in? What are they doing at any particular time? But what the CSI does, it captures beautifully these moves in on the charts, and it saves us having to have multiple charts open for the pairs and in multiple time frames. Now this is actually docked, so if I just undock it here, this is the 3 minute. Let's go up, say, to the let's do the 12 minute here. Let's go multiple of 4. Those of you with multiple time frames, there's no hard and fast rule with multiple, how you choose your multiple time frames. A lot of the work on multiple time frames was done by Alexander Elder. I don't know, many of you may have had some of his books. Then it was a multiple of 4. Is it 4 and 6, David? He chose those. I don't know how he came to that. You would have to try and research that yourself. So what we can see here on the 12 minute, well, we can actually see the pound is, although it's at an overbought, a strong position up here, and the yen is still falling. So maybe this is just a pause point in the move higher. Let's move up the time frame. Let's go to the 30 minute. And we can see it's still climbing. And let's go up to the hour. Where's the hour? I always lose the hour. Let's do the 2 hour. There we are. On the 2 hour, wait till it loads. Let's go to the hour. There's the hour. Let's do the hour. That's still climbing. We've had a cross and that's still climbing. And on the 2 hour, yep, it looks like. So maybe there is more strength in this move. But at the moment, what we have to wait for is whether there's 2 things. First of all, let's move that out of the way. First of all, we have to wait on the hourly chart. It has to move over that high. Now, the slower time frame CSI are telling us that there is still potential in this move, but we have to wait and see. But we also have to factor in that there is news at 9:30 for the British pound. And the Renko is also helping to hold us in. And with regard to entry, using this, we're asked about, well, how do you've got your CSI, you already know that something's either overbought or oversold. We're looking at a potential reversal. This is highlighted also on the Renko, and what will happen is the dots will change color first. These are little trend dots. These are of all the indicators we have, this is and other than the volatility, which triggers in real time. The dots, would you say they're the closest to the price action, David? Because of the algorithm in them, they are the closest that we have been able to get to the price action. And when you have a series, the trend monitor, they work very well in conjunction with the monitor. Wait until that changes and it goes on. And when you have we haven't even got a grey, when they move into a congestion or a pause point, you will find they will come into grey before they turn red. And the support and resistance indicator works in the thicker the line, indicates that it is a stronger level as opposed to a hatched line. But in terms of importance of these levels, we have developed the Camarilla indicator that we can see here, and we've actually got 6 levels on here. So where do we think this is heading? For the purposes of the Camarilla protocol, the price objective for the pound yen is 143.58 because this is the R4. The R4 is actually a really important level. Some Camarilla indicators only give you 4 levels. We've actually brought it up to 6, and it's often said that once it gets to R4 and if it manages to break from R4, that is also considered a legitimate breakaway. But as I said, we have the technical picture to watch in terms of volatility, and we also have the fundamental picture because we have the news coming up at 9:30. And what's also interesting with this particular candle here is we look at the volume. Now, as I said, volume is relative, contextual to the session. We've had a reasonable, it's certainly over average, but the spread of the candle is quite wide. We would want to see certainly a lot more volume coming in that we see here. What's also interesting in terms of volume and price, if you look at this candle with that little this volume bar with that candle, that is a clear anomaly. With that kind of volume and that kind of price range, this price wasn't going anywhere, and it didn't. And if you want to, if you like, characterize volume price analysis, it does two things. It validates a price move, or it throws up an anomaly. And we have many prop traders, people in the on the other side of the fence. We're independent traders on the inside, either trading other people's money. That's all they look for. They look for an anomaly, because an anomaly is, it's not, it shouldn't be there, and that gives them the heads up of what is likely to happen next. Right, David, can I pass over to you? Have you got the euro? I'll wait and see what happens with the pound yen, see whether it actually bursts through. Can I move over to you, darling? Is that okay? Turn myself on.
We're just going to switch screens, and just while we're doing that, I have to say that 10-15 minutes that Anna did just then is an absolute masterclass in pulling together all the elements of this business, trading as a business, and what it is you're looking for the whole time. And it also reinforces not only all the aspects, perhaps the one aspect we didn't touch on there, Anna didn't touch on there, was obviously related markets, where you'd be looking at what is going on in terms of risk sentiment, particularly in equities. But what it does really bring home to you, I hope, is first of all the importance of time frames. Secondly, the importance of choosing your particular time window that you're focused on, and trying not to be diverted away from that. And thirdly, it also reinforces the point that this is a business where you need multiple monitors. It's simply not possible to run the system with all the information that you need on a single monitor, which is why you tend to see traders who are working full time. They will tend to have minimum of 2, generally 3, often 4, sometimes 6. I'm not saying that's where you have to start, but that's where you should be aiming for. It's not a macho thing. It's not, I've got 26 monitors and you've only got 4. It's nothing to do with that. It's the fact that you need all this information at your fingertips quickly. You need to see what the currency indices are doing. You need to see what the VPA profiles are in your chosen market. You need to see what is going on in related markets in the complex. And you need to see that reflected on all the indicators, particularly obviously something like the currency dashboard, where you're looking at multiple timeframes as well. It's a huge amount of information. The consistent theme, if you will, is that whether you're a scalping trader or whether you're an intraday trader or longer term, you still need all this information. So it doesn't matter, particularly from that perspective, what approach you're taking. The approach and the analysis is identical. And what I did while Anna was talking, just for the purposes of really reinforcing that, I dropped down, this is the 1 minute CSI, because what we were seeing on I think it was the 3 minute chart that Anna was on, and up into the slower time frames, then I'm not suggesting that you have every single time frame from 1 minute upwards, but what the 1 minute shows you is it shows you the fact that what you're maybe seeing on a 5 minute time horizon or a 15 minute time horizon is actually being represented on the fast time frame indicator on a 1 minute or 2 minute, 3 minute, whatever it may be. And what you are seeing there is two things. First of all, an opportunity for a scalping trader on a very fast time frame. But secondly, you are actually seeing what you're seeing on the price chart. You are seeing price perhaps pause, reverse, and then continue on its longer term journey. So what you're seeing on these very fast time frames is merely a graphical representation of what is going on in the chart. And in terms of the pound, we saw strong buying of the pound. Now we've seen strong selling of the pound. The nice thing with NinjaTrader is that it prints the local time correctly. So what you're seeing down here, this is 8:40 UK time, and it's now 8:56. So we've had a a 15-minute period here, through here, where we've seen some selling of the pound, the yellow line here. And we're now starting to see that bottom out. Does that mean the pound is going to start buying again? Not necessarily. You'd have to move up to the faster time frames. But what this does is it graphically tells you in a very clear way what is going on in terms of the pound on the very fast time frame, what you are seeing perhaps in either a minor or major way. If you're on a 5-minute time frame, then you're going to see quite a decent move. If you're on a 15-minute or a 30-minute chart, all you are going to see is simply a minor move lower, which to you as a, in inverted commas, longer term trader is really not of very much interest, because you know for a fact markets never go up and down in a straight line anyway, and therefore this constant oscillation is something that you expect. It's there every minute of the day, and it's just something that you accept as a fact of life as a slower term trader. As a scalping trader, this may be significant, it may be not. Depends how close you are to this very fast time frame. But I wanted to just reinforce the point. If we go up to, I think I've got the 15-minute here. What are we seeing in terms of 15-minute? Well, you're seeing that reflected, that little bit of price action, you're seeing that reflected in a flattening, a pausing point. The yen here is still selling off quite strongly. So in terms of you as a 15-minute trader, it's decision time. Do we think this is going to rally further? Do we think this is a pause point? Do we want to, if we've got a multiple contract running, do we want to take some of that contract off the table and leave some to run on the prospect of it continuing higher? What do we want to do? That's really what this business is all about. It's pulling together all those elements, and what VPA does is volume price analysis is the core methodology. It provides the foundation. It provides the heads up to, as Anna said, anomaly or confirmation. And once you start to see those anomalies occurring, and indeed on the 3-minute pound yen, there were 3 or 4 examples, one after the other. When you see price action reaching a point where you start to see a wick to the top side, price action closes, tries to rally again, maybe gets a little bit higher up, another wick, does the same again. I think it did 3 or 4 times. That is telling you that market, it's not telling you the market is going to reverse and we're going from a primary trend higher to a primary trend lower. That may well do if that follows through to the slower time frames. But what it is telling you is that we are reaching a point at which this particular market is exhausted or it's tired. In terms of the CSI, we're moving to overbought and oversold conditions on the faster time horizons. And therefore your expectation is, at the very least, that the market is going to congest or possibly reverse lower a little bit. And thereafter, whether that then converts into a full-blown reversal from a primary trend higher to a primary trend lower will depend on whether that particular strength of move has enough volume in it to drive it through into the slower time frames. And that is what you are trying to do the whole time. You're trying to decide in your own mind, because let's face it, the crunch point in trading comes when you've got a position in the market and the market pauses and reverses. This is what this market does the whole time. The Forex market is one of mean reversion. It does it constantly, from oversold to overbought and back again in all time frames, from 1 minute to 1 month. So what you are battling as a trader, where you're trying to extract maximum profit from each trend that's developing, is you've got to decide, you've got to understand in your own mind whether this is a full-blown reversal and it's time to get out, or whether it's a case of sitting through a pullback reversal and then continuing on in the direction that you were traveling in originally. All the indicators help. Probably the greatest help of all is obviously things like the CSI, but in addition to that, you've got the trend monitor, which you have running across multiple time frames. And again, it's going to help to keep you in. The trend dots will change first. You saw it on the Renko. There wasn't even a flicker on the Renko. And it's using all the tools available to help to keep you in through those phases of price action, because that's where the crunch point is. That's the nub, if you will, of trading, because if you're bounced out of trades all the time because you're frightened out of them, your trading account will never move forward, because you'll just be taking a series of small losses and you'll be taking a few small profits. And your account will generally probably slide backwards, not at great speed, but it won't go forwards, because what drives it forwards is those trades that you can sit in and hold for a good return, which then outweigh all the small losses that you take along the way, which are part and parcel of trading. Let's just step down onto the currency matrix. Let's see what's going on here. I was looking at the euro particularly. Okay, we've still got decent buying on the euro. Euro, again, on the matrix, it's a nice currency to consider because it's always the primary currency. So what you want to see in terms of the matrix is, if you're looking at the euro yen maybe as an opportunity, or euro Aussie, you want to see all these other currency pairs join at the top. And if these are generally moving higher, then that is telling you that you've got pretty strong sentiment for euro buying across the complex. In other words, the pair that you're trading is not moving in one direction and everyone else is moving in the opposite direction. And that's what the matrix is telling you at the moment, that euro sentiment, we've got pretty strong euro buying, and then it's just a question of, well, which currency pair am I trading in, what's giving me the best opportunity, etc. But for the time being, that's what we're seeing in terms of the euro. Just over onto the currency array, just flick that on as well. And what we're seeing in terms of the euro is reflected here as well. You've also got the overbought and oversold ranking ladder here, which is giving you a sense of when a currency pair is reaching an overbought or oversold state. As you can see here, again, it's graphical. The strength of trend in euro is the strongest one right now. And in terms of the euro pound, because we're seeing, or we have been seeing, some strong buying of the pound, that's the reason that that one is really ranking in the middle of the array at the moment. It's not joining all the others up here because there has been some decent buying of the British pound. In terms of, let's just have a look at the, if we're looking at the euro yen, we want to see what's happening in terms of the yen pairs. So if we just click off the yen, and that's not too bad as well. They're all on the same side, and with the yen, where the yen is the counter currency, what we want to see here is we want to see all the yen pairs above the midpoint, if you like, the fulcrum here at 0. So again, what we're seeing here in terms of trading a euro yen or a pound yen or indeed a Swiss yen, it is very much being driven on both sides of the equation for the time being. Just go back to our slower time frame CSI on the 15-minute. And there, that's really what's reflected. And the question you've got to ask yourself now is, okay, we're seeing the euro beginning to top out. The pound is certainly starting to flatten off in this time frame. The yen perhaps has still got a little way to go to the oversold condition. It doesn't necessarily equate that these levels here have to be considered as barriers, if you will, through which that currency pair has to pass before it's considered overbought or oversold. All we're saying is that's a region to consider those currencies. It's not a hard and fast, touches that line and now we're into a certain condition. So it's just giving you it's a guide, if you will, as to when currencies are approaching these conditions. And can I also say that, and you only have to look at the yen, for example, or indeed the dollar here, when currencies get to those regions, it does not automatically follow that they are just going to roll over nicely and continue lower in a nice reversal trade. Sometimes they do, sometimes they don't. The only conclusion that you have available is that they will at some point, and it's a question of time and being patient. And as you can see here in the yen, it got into overbought, it stayed there, and indeed it carried on higher before it then started its journey lower. And a similar sort of situation for the dollar as well. It flip-flopped around, climbed a little more, and now we're seeing the strong selling in the dollar continuing throughout the slower time frames. So when you're trading on reversals, it's a question of being patient because you have to wait for that to develop. It will develop, it will move. It may not necessarily go all the way back down from an overbought to oversold and vice versa. But certainly once it gets up into one of these states, then you can rest assured it is going to move. It has to, because that's what currencies do all day long, moving from oversold, overbought back again in this sort of sinusoidal price action that just reflects what is going on the entire time across all the time horizons. And it's the reason why one trader as a scalping trader can make money to the short side. A slower term trader on a long position makes money just as well. And that's why it's possible for two traders with completely opposing views to make money, because they're trading different time horizons. They're just trading a different profile, a different characteristic of the currency. Let's just go back to, let's just have a look at the currency indices, just see what's going on there. Just gives us a heads up. I've got these on 5-minute. On the left, I've got the yen. I've got the dollar index in the middle, and I've got the euro over on the right-hand side. So we've seen some pretty strong buying of the euro. That was a strong buying. This is 8 o'clock down here. This is when London got underway. Lots of euro buying through to 9 o'clock. We're now starting to see, we've seen a bearish engulfing here. So we're starting to see some negativity towards the euro come in terms of the dollar. We've seen selling of the dollar. Now we're starting to see some buying coming in on this particular time horizon. And over onto the yen. Selling of the yen, that's what we've seen throughout the first hour of trading. Now we're starting to see a little bit of buying coming in. And of course, as I said earlier, you'd be looking at what is going on in terms of the indices and risk sentiment, whether we're seeing risk off, reversals in terms of the US indices at any rate on Globex, because they're trading 24/7. And wherever you are in the world, it doesn't matter, because there will be either a physical exchange which is trading. If you're in the Far East, it'll be Tokyo or it'll be Australia. For us in Northern Hemisphere, we're looking at London, the European markets, then the US markets get underway. And even if there isn't a physical exchange open somewhere in the world, which almost certainly will be, you've got Globex, which trades 24/7 pretty much universally on the futures contracts. So there's always somewhere that is reflecting of risk appetite, risk on, risk off, which will be directly related into the currency markets. Just pop that down. Let's go to the actual charts over on the multiple time frame charts. There we go. And that's really what we're seeing now. We've been around our associated markets, our indices, our related markets. We're just getting a sense of what is going on. And this is on the euro yen. I've got the 5-minute, the 10-minute, the 15-minute, and then the bottom is the 30. We've got the Renko in the middle, and then down onto the daily chart on the bottom right. And really, this is your chart, which is pulling all that together and telling you that's what we're seeing, and that's the reason we're seeing it, and that's really how to put all this together. We've got a nice 2-bar reversal on the 5-minute, so put this candle over this one. What have you got? On a 10-minute time frame, you'd have an up thrust, probably with some decent volume. And on the, let's just pull this one up. This is on the 10-minute. Now what we're seeing is we're seeing volatility come in. And it's the beauty of this indicator in that it triggers in real time. You don't have to wait for this candle to close. The expectation is now we're seeing volatility. Two things. First of all, the market makers are active, and it will almost certainly be reflected in terms of volume. And secondly, you've got a decision to make, because the anticipation now is what is likely to happen next is that we may well see price action reverse inside the spread of this candle. Now, as a trader, if you're happy to wait for that to sit through that, that's fine. If you've got a profitable position and you're starting to see it reverse, then you've got a decision to make. If you've got a loss situation, again, you've got a decision to make. It's easier when you've got profit. It's harder when you've got loss. But when the volatility arrives, it is telling you loud and clear that you've got volatility. The indicator is very simple, but it's so powerful. What it's doing is it's looking at average true range over a certain number of bars, and it's giving you a heads up as to how extreme that price action is. How far outside the average true range is that price action moved away? In other words, from the norm, the expected, the average, if you will. And when you get volatility, the issue with volatility is speed, because when the markets are volatile, they're always associated with speed, because volatility is a compression of time. That's really all it's about. What you're seeing on a 10-minute candle here with that extreme price action is that price action would normally take place over, let's say, 2 or 3 candles of average duration. But what happens in volatility is that time is compressed and the price action expands. So what you're seeing is speed of movement. And what speed of movement does is it drags traders into weak positions because of the fear of missing out, FOMO. And I was going to explain why we have it, but I'm sure you've come across it. But it's a natural reaction to something that's moving quickly. And you can think of all sorts of analogies for yourself. But when something moves fast, your instinct is to do something. It's a natural reaction. It's natural flight or fight in a way. And when you see a price action moving quickly, your reaction is to jump on because you want to make some money quickly. That's your natural reaction. It's emotion. It's driven by emotion. The market makers understand this perfectly, and they use it all the time. It'll be used with news. It'll be used with non-news. It'll be used with gossip, with statement, with rumor. You name it, it appears all the time. The market jumps, you jump in, and then you get trapped in this position of weakness, because then what occurs is the fear that you've been stupid, you've made a wrong decision, you've been drawn into something you didn't want to do, and you're then left under pressure because you're now faced a situation of uncertainty and doubt, and you're not sure what to do, and it's the worst thing to happen. And that's what the volatility gives you. Now, there's no guarantee that the price action will move back inside. Sometimes it does. 8 out of 10 times, let's say it does. Sometimes it does not. If the price action continues away from that volatility and is confirmed with a close below or above it, that's fine. We're just moving away from it. You know, we've got bearish sentiment or we've got bullish sentiment. That's fine. But it just gives you that heads up in advance as to the fact that we've got volatility in the market. We've had some rapid price action. We know for a fact they're going to be traders trapped in there anyway, because a lot of them will have jumped in, and therefore the market may well indeed congest at that level. And of course, it's looking at it in multiple time frames, because now what you're doing is, you can see we've got exactly the same over here on 15. So we've got a 2-bar reversal and we've got volatility on 15. That hasn't closed off yet, but it's really just confirming what we've got on 10. Down onto 30, we haven't got volatility on 30 yet, but we had one here. The market did continue higher, and now we've got this strong reversal coming. And of course, all of that will be reflected on the CSI. If we head back over to the CSI, let's just pull that up. Where are we? That one, there we go. This is on 15. If I drop this down to, let's drop that down to 5, let's say. There we go. So what are we seeing on 5 minute? We are seeing that reversal in the pound. So we've got the pound rolling, we've got the euro rolling, and we've got the yen, which is picking up nicely off the oversold condition. And thereafter, what it comes down to, if you're not in a position, is you've now got a decision to make. Do I want to trade this as a reversal? In which case you might have got in here early. As I said before, you have to be patient. You know, if you see this developing, then you've got to wait for this to happen. If you see this developing, you've got to wait for this to happen. But it is happening. The advantage is you get in early. You can maximize profits from the reversal because you're in the position early, but that comes at a cost. You've got to, the cost that you put into the market is a wider stop loss, because you have to allow for this price action to buffer around in this region. So you have to put a wider stop loss in. If you're a scalping trader, under normal conditions, you might trade with a 5 or 6 pip stop loss. If you're trading a reversal, you might have to put a 10 or a 15 pip stop loss in place. Bigger risk. But then the return is bigger because you're taking advantage. You're in early. You've already made some money in here. Traders who are now looking at this as a potential trend developing will be moving into the market, but they'll be moving in with much tighter stop loss. That's their risk. Their risk is lower, but then so is their return, because they've already missed out this chunk of the move. So they're not going to maximize the profit off that particular trend, but the payoff for them is they put less risk in the market. It's all about risk and return. That's really what it comes down to. And the other point about the CSI is that what you're looking for constantly all the time, the CSI is a pure graphical representation of the chart. It really tells you all you need to know. And what you're looking for the whole time is you're looking for examples where you've got a strong sell in place on one currency and you've got a strong buy in place on the other. Because with the euro yen, that is where you will see the trend the strongest. You'll certainly be seeing it on the pound because you've got strong selling on the pound, counterbalanced with strong selling of the yen. And you could also look at examples on the dollar, for example. Don't even need to look at a chart. We've got strong buying of the dollar coming in. So again, you could look at the euro, you could look at the pound, you could look at cable, and maybe in time you might see the Swiss franc roll over against the dollar and see an opportunity there. Where these are crossing, for example, you will see that trend as well, because we've got strong selling in the Aussie, and that is now starting to be reflected in buying of the yen. So you will see a trend developing there, but it's a much lower level. And of course, the question there is, well, I may have a little bit left in that trend, but as far as the Aussie is concerned, it's getting down into the oversold region. So there is a potential for this to tick up at some point in the not too distant. And when the Aussie is moving in the same travel direction as the yen, then that market will be in congestion. So those are the sorts of things that you have to look at the whole time. You know, if you've got a cross that's up here somewhere in the middle, maybe the pound, let's say cable, for example, is probably a nice example where the pound is falling strongly and the dollar's rising strongly. Where you've got a cross somewhere in the middle here, then you've got a decent amount of travel, potential travel up here and potential travel to the bottom. So in that sense, again, there's no guarantee that it's going to go all the way up here or the pound is going to go all the way down to the bottom. But in terms of taking a position in the middle here, there isn't so much risk because you've got more opportunity of the trend developing nicely to the top side and the downside. Where you're tight here, for example, it's a more limited opportunity. I'm not saying there isn't an opportunity there, and certainly the Aussie yen, it will be moving, largely driven by this yen buying. But in terms of the Aussie, you've got a small risk, a reasonable risk that Aussie is going to bottom out here and flatten off and potentially even move in the same direction as the yen, in which case it'll be in a congestion phase. So there's lots and lots of things. And of course, you know, which currencies do you not want to look at right now? Well, fairly obviously, you know, the New Zealand yen, New Zealand dollar here, this grey line, it's flat. It's going nowhere on its own. Now, there may be enough momentum in one of these other currencies to actually drive a little bit of trend strength in there, but it will be very muted in contrast to what is going on in terms of euro yen and pound yen, purely because half of the equation isn't delivering anything. In other words, the New Zealand dollar is not delivering any strength of momentum. It's just flatlining. So however much strength is being driven through the dollar or the yen or the euro or the pound, it will do enough to maybe generate a little bit of movement, but it's way, way off what you would look for because the New Zealand dollar is not doing anything. It's just flatlining. So you go through the CSI in all these time frames and it will tell you, really without looking at a chart, what are the opportunities, what's moving strongly, what isn't moving strongly, and you know, where do I go to hunt out the opportunities I'm looking for in my particular chosen time frame. I'm going to pass back to Anna.
Right. While David was looking at the euro yen and some of the indicators from our currency dashboard, I've actually changed some of the time frames on the pound yen because it's really, really interesting. What I should have mentioned when I was talking about the Camarilla, the levels, the values that are given, that are delivered by the indicator. This is the 10-minute chart, and up to, but not including the hourly chart. These values change every time there's a session, the session changes. So these levels here, the R4, they will stay here until this evening, and then at rollover, they will refresh and you will get fresh levels for these faster time frames. And I said at the time when we were looking at the hourly chart here that the level, if it was aiming any higher, was to aim for the R4 and the importance of the R4. But when you go down to the 30-minute chart, oh, and by the way, sorry, on the hourly chart here, the levels that are on the hourly chart up to the daily, these stay here all week. So you've got some very, you've got a very easy way of identifying what is an important level from a Camarilla perspective. So as I said, the R4, the R1, the S1, that's what we call the sort of buffer zone. It's the neutral zone. But what they do is they help with a price objective. They help with stop loss. A price will bounce off these levels. There's so many ways that you can use these levels. And Fibonacci works in much the same way. The market has taken on board the Fibonacci protocol, and you know, the importance of the different levels in Fibonacci. We've just happened to use Camarilla. We've actually added a little bit more to these levels to make it our own, but they basically identify these very important levels that we should be aware of. But it's not just a level that it refreshes every day, but only on certain time frames. So when we move up to the hour, these will stay here all week. But to go back to the 30-minute, what's interesting on the 30-minute, and I was talking about the R4, this is what I meant. We had the volatility triggered, we had the retrace into the spread of the candle, but look where it actually stopped. It stopped at the R4, and as I said, an R4 level from a Camarilla perspective is it has to break through and close, a strong close above it, supported with volume, then the chances are it will aim, this is where it's aimed at 143.33. It was just really interesting that on the 30-minute chart, the price also was driven to the R4 level. So let's just leave that here for the time being. This is the hourly chart that I've got here, where we had that volatility candle. It was actually a break from the volume point of control. Again, volatility triggered, retraced within the spread of the candle. And on the faster time frames, we can see here, we can see the Renko, the dots. We had a few grey dots, then we had some blue as a price sort of tried to a price support came in, but we've now got some red dots coming in. The trend monitor hasn't changed. It hasn't gone to bright red yet. And the thing is, if we didn't have a piece of news coming up, you could be looking at that as a potential reversal trade. And we can see here on the 3-minute chart, we had this congestion moving across here. We had the pivot to the upside. We had these two candles here that you see under these two candles with buying coming in. Really nothing to support this price. This needs a lot more volume to move higher, but we know why it's not moving higher, because it has reached this critical price level based on our Camarilla. And at the moment, we can see it exactly the same as happened last week, where we were looking at the pound and we were looking at it just before the retail sales, and we have another piece of important news coming out, and we're seeing very, very similar price action. When you have an important piece of fundamental news, you have pre-news, you have some volatility, then you have a pause, then you have a congestion period, then you'll see the price action kind of pick up, a lot of volatility coming in again, and we just have to be patient. And I said at the time, you can either decide based on what you see on your charts. You can, if you want to take some kind of limit order in, that's fine. You know what the levels are. You know where this price has got to has got to get beyond to move further. Or you simply wait, and we wait to see whether the news supports what looks to be this reversal that we can see in these time frames, or whether in fact it's setting itself up. It's like a trap. And if you like, it's also the importance of fundamental news. All traders start with technical analysis and the chart. And some years ago, we were on a panel, and they were day traders, they were index traders, and the question was asked about the fundamental news. In fact, it was the Philly Fed, wasn't it, David? And the joke was, oh, is it some kind of cheese? Because we have a soft cheese here called Philadelphia. Ha ha, very 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 droll. And once all the laughter had died down, I asked a question. In other words, the joke was they paid no attention to the fundamental news, any fundamental news, because everything was priced into the chart. So my question was, well, I said, do you trade through non-farm payroll? Oh, no, we don't trade through non-farm payroll. Uh-huh. What's all that about? So you have to also, we talked about context of price action, the volume in terms of, the context of the session. And now you have to be aware of how items of fundamental news can affect what is going to happen on the chart. But as David said last time, even fundamental news itself, there's a hierarchy within it at different times of the economic and business cycle. Although on your economic calendar, the fundamental news will be graded as tier 1, as very, very important, having a high impact on the market. It depends where you are in the cycle, in the broader business and economic cycle. And a great example of this has been the employment numbers, interest rates. For until very recently, the interest rate decisions from the Fed, they were awfully interesting, but everybody knew that interest rates were going nowhere until very recently. So yes, they were given, they were classified as tier 1, very, very important. Central banks need to know, they need to tell the world what they're thinking about interest rates. But really, because of QE, they weren't going anywhere. They weren't going anywhere. It's that more subtle interpretation of the fundamental news. And what I have to say also is, those of you who know us, we go, we pull up charts, we look at this, we bring in fundamentals, we look at related markets, we look at that, and you say, oh my goodness, how am I ever going to pull this all together? And all I can tell you is this is no different to, if you imagine if you were a pilot. We have a neighbor who has recently graduated to traveling long haul, don't you? You have to start. And as a pilot, I've taken a few flying lessons, so has David. When you start flying, you don't go into 747s, they're not around anymore. What's the biggest the big Airbuses now, these huge planes that take 400. You don't 400, you don't go and start on one of those. You start in a tiny little plane, a prop plane with a few instruments, and you get a feel for the instruments, and then you gradually move up and up and up. And it's very much how you should approach this, is start with getting to grips with one chart, multiple charts, price action, volume, how it interacts, understanding the price cycle, having one or two indicators to help you. I've actually got the 200 MA here. I know David doesn't, but I must tell you a story about that. I was reading in the Financial Times. I get the Financial Times, and I subscribe to some of their analysts there, and he made a very interesting point, and it's about the indices, and we're going to be looking at the indices at our webinar on Thursday, and about the importance of the 200 MA in terms of why 200, why not 205 or 195. Let's set that aside. A lot of algos actually are programmed to take the 200 MA into account. Now, you could say it's self-fulfilling. Maybe all indicators are self-fulfilling prophecies, other than price action and volume. But that's why even mainstream media pays attention to the 200. What he didn't explain is, well, what type of 200? Is it simple, exponential, weighted? I've actually got, what's mine called, David? I can never remember. Hold on, indicator list. It's got, it's the fractal adaptive moving average. So if you want to scope it out, it's a very interesting take on the 200 MA. So I'm just waiting for the news to be released. As we saw, exactly the same as last time, a lot of volatility coming in, and FOMO, this is when it all kicks off. And those, I think the people here who are joining us, who were at the presentation David and I did a couple of weeks ago, I gave the evolutionary explanation for FOMO, and it really does boil down to this. And if you think about it logically, it makes sense. Back in the day, when we were all hunter-gatherers, or certainly men were the hunter-gatherers, and sent out for to make a kill and come back and feed the tribe, the family, whatever, they could not afford the luxury of allowing a nice tasty beast to simply walk by and thinking, well, I don't really like the look of that. I'll wait for the next one. Someone's a bit plumper, one that looks a bit more, it's got a bit more meat on it. No, you had to take your opportunities and for the kill, because if you didn't, you starved. That, if you like, is hardwired into us. So when we see volatility come in and a lot of movement and momentum and speed coming into it, oh, I've got to take this trade, I've got to take this trade, because if I don't, maybe another one won't come by. And what we have to disassociate, people talk about mindset in trading. Mindset we have to develop is really, we have to remove the wiring, or not remove, we have to be aware of how we are hardwired from an evolutionary perspective, our biology, and understand it, and actually talk to us and say, yeah, brain, I understand, you know, but we're not on, you know, we're not hunter-gatherers anymore. There is another one coming along. You know, there will be another one coming along. I'm cool. And neuroscience tells us that if we have this internal conversation with us and we look at, you know, and we back it up by our understanding of the price chart, understand, you know, what is going on behind this price action, there is a heck of a lot of manipulation and, you know, opportunities from people, you know, from insiders who really just want to you know, take our money off us. We are immediately in a cooler, we're in a cooler space. We have to take the sting out of the emotion that is triggered, which is fear, which is fight, flight, or freeze. And that's the third F, if you like. And, you know, the freeze is traders who maybe have some success and then suddenly they can't seem to, as I say, pull the trigger. And that is because you have to understand what is going on in your brain, how your brain is being manipulated. That's a much better, you're being manipulated into taking action that, you know, really in the cool, rationally, you think, I don't want to do that. And FOMO is it's scarcity. It's you know, sales, in a sales environment, shops use it all the time. You only have to look around you. It's really plugging into that expiring offer. Buy now, buy now, buy now. If you don't buy now, you're going to miss it. Oh my gosh, my family's not going to, I won't be able to feed them. Oh, what am I going to do? What am I going to do? Really, when it all passes, we look back and say, why did I allow myself to, you know, to be manipulated in this way? And that is the reason why it's not you. We are at the mercy of our evolutionary biology, but we don't have to be if we understand it. Right, has the news actually come out? I've been burbling on here, clearly not had a huge impact. And what I was going to say as well, the heat map is an indicator David hasn't mentioned of the 4 that are part of the currency dashboard. And what I've done here is I've highlighted the pound yen and the euro yen, and it's a great indicator. It's a great indicator for scoping out potential trades from an overbought and an oversold perspective, and also a very quick look. You just have a look and look at the sales and see what's moving and what isn't moving on a longer term basis, but also on a daily, because once you're in a trade, what you can do is you can bookmark the pairs that you're considering, and you can see, as we see here, the pound yen that actually jumped up to, I think at one point it was spot 6 or spot 5, and now it's at spot 9, and it's all helping to confirm, if you like, the analysis that you can see on your chart. Think back to, you know, look at I'm sure you've seen pilots and YouTube videos on flying. It's a great, actually, one of Dave, what's your favorite YouTube channel?
Pilots ITV.
Was it
It's called Pilots ITV.
Yeah, Pilots, if you can put it in the chat box, Pilots EYE TV. And that is a bird's eye view of what goes on in a cockpit of, you know, pilots landing on some very, and it's a fantastic you know, even if you're not interested in flying, but it's look at it, because you can see how these guys are trained and what there's obviously surrounded by instruments. I mean, you know, there's noise bleepers going off and all sorts of things. They have to be aware of what's going on, but how they actually control and manage all this data that is coming towards them, that is given to them by their instruments. And in a way, that's how we have to approach our trading. Sorry, did I want to say anything to that? Right, I think that's really, we have to stop there, because we said You said it now.
Yeah.
Pilots ITV, fantastic. It's a brilliant site. It's as I said, and the analogy. And in fact, pilots do actually make some of the best traders because because of part of their training, they have been able to take in sometimes conflicting information that you can see that you know, your charts can deliver. I'm just going to turn myself off a minute, darling. So
Sorry, Anna's just got a frog in her throat, so apologies. We are way over time, so we are going to wrap up. I'm just going to pass back to Anna, and just to say thank you from me for coming along today, and hope you've enjoyed it. And just Anna's going to pull up a couple of slides just to give you the heads up on where to find the further information about us and the indicators and everything else. So thanks very much from me, and I will certainly see you on Thursday. We've got 2 webinars on Thursday, and I'll pass back to Anna.
very much. Very quickly, from what we say here in terms of technical analysis, fundamental related markets, it's all contained here in the box set that you can buy at Amazon called the Forex Trading Library, and this is I think it's $9.99 at the moment, but it is the ebook version. With regard to the indicators, very quickly, here we are. They are here at quantumtrading.com. As you can see, we've also got them available for TradingView. Prices, how the videos on the indicators, support pages, and the individual indicators. If you want to check them out as well, you just click on, there's a scroll bar here, and you can just go here. That's actually on TradingView. Where is it? Lost it. No, go back here. Volatility. There we are. This is the volatility indicator. And what we've done is we've put all the information on the individual indicators, videos, and as I said, support pages. That's on quantumtrading.com. That's the indicators. With regard to our education program, that's at quantumtradingeducation.com. That is those are the 5 modules that form part of the program. It's purely self-directed. I can't remember how many slides. I think it's 7,000 slides in total, David. There are 7,500 slides on this program. It sounds very scary, but it's everything you need. But they're all automated. There's no people droning on in the background. They are very, very cool slides that animated that David actually put together. And in terms of price for the program, the program does include the full suite of indicators, and it comes out at 1391 for MT45, 1694 for NinjaTrader, but you can spread the payments over 3 months. With our indicators, whenever we develop new indicators, they are automatically added to your package for free, and we offer a 7-day money-back guarantee. And if you want more information, it's anna@coulling.com or david at quantumtrading.com. With regard to the, yes, for Thursday, oh, fine. Our schedule of webinars is now settled. We are Tuesday at this time for the London. Thursday, we have 2. We have one, which is about lunchtime, our time, where we look at the Forex only with the NinjaTrader platform. And then we have a day trading one for the indices, which is later on in the afternoon. So, and as I said, the schedule is now settled. David, have you read QF32? Great book. Oh, well, I'll tell David.
No.
Well, look it up then. Brilliant. Thank you so much for coming along. I hope you enjoyed it. Have a great trading day. Let's have a look what's happening and see what's happening with pound yen. And if we don't catch you on Thursday, we will see you again on Thursday. Thank you very much.